Okay, now it's the second video of topic 7 on derivatives. We'll be looking at swaps. So we'll be looking in particular at something called perpetual swaps, variance swaps, and the decentralized exchanges that trade swaps. First of all, what are swaps? There's so many different types of swaps: asset swaps, commodity swaps, total return swaps, interest rate swaps, basis swaps, currency swaps, credit default swaps, variance swaps. So an asset swap is a very basic, it's a general term when you just swap two assets. So for example, UniSwap is an asset swap exchange for ERC20 tokens. Commodity swaps, you swap income streams based on that are linked to the prices of commodities such as oil and gold. Total return swaps are a bit like an asset swap when you can't actually physically swap assets. So, I mean, a fund may not be able to hold certain types of foreign equity, shall we say. And so they do a swap where they get all the returns, all the dividends, all the capital gains as if they owned it, and they swap for something else. The counterparty would take whatever it is they've swapped, all the total return on that. It just avoids putting things in your banking book or your company accounts if you're not allowed to do it. Interest rate swaps should definitely come across before. The most common is fixed for floating, and we'll look at those in a minute in a bit more detail, just to remind you. Basis swaps are a type of interest rate swap where you trade interest rates along a curve. So you might have swapping a 3-month for a 6-month interest rate payment. So that's what we call like a carry trade, where you're trading along a curve of different interest rates. You pay one, receive the other. Currency swaps, I'll go through those in more detail because the main perpetual swaps on Bitcoin and Ether and other currencies are actually like currency swaps. Then there's credit default swaps, which are a bit like an insurance contract. You just sort of pay a premium, and then if something happens, like General Motors goes bankrupt, then I get compensation for that. If I hold the shares or something like that, then I would be entitled to it. In the States, you can do something called a naked credit default swap, which means that you can pay for insurance on anything happening that you don't have to have a proper interest in. So it's like a bet on some company going bankrupt or some collateralized debt obligation defaulting or something like that. And you can just bet on it. That's what a credit default swap is. It's like an insurance premium, and you get a big payout if something happens. And a variance swap is something, again, quite different. You're swapping, it's a bit like an interest rate swap in that you're swapping a floating thing for a fixed thing. So just like there's a swap rate for interest rates, that's the fixed interest rate. There's a variance swap rate as well. And I'm going to end this topic by talking about the fair value of a Bitcoin variance swap, or a Bitcoin variance swap rate fair value calculation. Bit of a mouthful. So just to remind you about fixed for floating swaps. They may be called payer receiver or long short or buyer seller in this case, as I said in the last video. The terminologies long and short don't always apply. So the swap buyer, or long the swap, or fixed rate payer, that's how you could term it on the left here, the orange box. In other words, the payment of a fixed rate, the swap rate, on some notional goes from left to right, from orange to grey, and then from grey to orange goes the swap seller, or short the swap, or more precisely, the floating rate payer. And I think the only one of these terminologies that is really precise is floating rate payer, otherwise it's a bit confusing. And the amount you pay depends on the notional amount. So in the example below here, there's an exchange of notional at the end. So this is a bit more like a currency swap, although it's not fixed for floating. Currency swaps are just based on two different interest rates in different currencies. But there is this exchange of notional. So anyway, there's a fixed payment, say every 3 months, and then there's a floating payment that this floating payment here in the middle would be determined at the date of the last floating payment. So you don't know them very much in advance what these floating payments are going to be. Okay, so a currency swap, two parties exchange the notional at some predetermined exchange rate. So for example, this graph on the right, this picture on the right, A is paying 100 million euros to B, and B is paying 120 million dollars to A. So that's a fixed exchange rate of 1.2 dollars per euro, okay? And notice at the end, there's this exchange of notional the other way, just like in the previous diagram for the fixed for floating swap with exchange of notional. But here it's floating and floating. So B, having received 100 million euros, it pays interest on 100 million euros at whatever the rate is. And A pays interest on $120 million at whatever the rate is. So they exchange floating rates in different currencies. It's called a currency swap. And at the end of the swap, they swap the notional back. Now, the reason I decided to explain this type of swap in a bit more detail was that the crypto perpetual contracts are rather like currency swaps, but there's no exchange of notional. And the interest rates are the net interest rate, basically, the difference between the two, is reset every 8 hours. So the most well-known perpetual swap is the BitMEX. That's, as you can see from this daily volume report. This was going up until August this year, from January the 1st until August, day by day. And at the beginning, the purple, that's BitMEX, was most of the daily trading volume, but Binance have been taking share all the time. Deribit and FTX hasn't really changed much, but Binance is certainly getting in on that perpetual swap. So because the swap rate is reset so often, the price, the Bitcoin dollar, for example, if it's a Bitcoin dollar perpetual swap, will be very, very close to the spot price on that exchange. All these exchanges also trade in spot as well. Anyway, these perpetuals are traded all over the place now, but BitMEX was the original one, and that started in 2016. So let's have a quick peek at the BitMEX perpetual, see how it's getting on right now. Okay, so we can see the order book here, and the forces of Saruman and Sauron. So it's very active. Lots of spoofing orders here that are just on for a second and then taken off. I mean, if there were thousands of different people putting on those trades just below the ticker price or just above the ticker price, not just one person, then, you know, spoofing isn't necessarily what they would be doing. It's when you've got large orders that are cancelled just below. So any detection of spoofing needs to take into account how far away the limit order is from the ticker price. has to be very close to the ticker price, and it also has to be a very, very large order that is only flashed for a millisecond. Most of these orders are just there for a millisecond, and they're trying to move the prices without actually trading. I think I explained that before. So anyway, that's the BitMEX perpetual swap. Now, the funding rate, that's the swap rate, is changed every 8 hours. And it's done in such a way to keep the swap price very closely in line with the spot price. So if the price of the perpetual swap is greater than the underlying, then the funding rate is positive. And if the price of the perpetual is less than the underlying, the funding rate is negative. So you can see here, this is the underlying price, the blue line, and the Bitcoin perpetual swap will typically be sort of inside that, because we have a whole curve that goes to backwardation here. We'll have a look at these curves later on, but there's a sort of backwardation when it's high and contango when it's low. So you tend to see, not always, that the funding rate will be negative when the price of the perpetual is less than the underlying, and that means we're in a backwardation. And the funding rate is positive when the price of the perpetual is greater than the underlying, and that means we're in a contango. And finally, variance swaps. Well, these were traded since last April, I think. Well, a little bit before then. This article on Cointelegraph is about GSR launching the variance swaps. And I don't know what the market swap rates are, the variance swap rate, VSR, in the market. It's very difficult to get hold of these figures, but we can find a model value for the variance swap rate, and that's what we're going to do in the video 5 of this topic. So there's a notional amount N, $1 million or something like that. And the payoff will be this notional times the difference between two variances. One is the realized variance, and this changes all the time. And one is the variance swap rate, which doesn't change, and that is set at the beginning of the swap. And fair value is the square of something called the VIX, which you may have heard of. The Bitcoin VIX was developed by me and Arben, and it's now live streamed by Crypto Compare, or at least it should be next week. By the time you watch this video, hopefully it will be live. And the realized variance, this is the average squared log return over the life of the swap. So typically we might use 30 days. And so the realized variance could be the average daily log return over 30 days. So it would change every day. We can do much higher frequency though in Bitcoin. And Arben and I have looked at variance swaps that with just 15-minute data over just 7 days. I think there is a lot of scope for this type of variance swap. Maybe this time next year or the year after, I will say that these are now commonly traded, but at the moment they're not. Now, UniSwap is a DEX, a decentralized exchange, which is an asset swap place. So if you go to UniSwap, you can, the first thing it says is, what token do you want to swap? Is it Ether, or is it any other ERC20 token, EOS or something, and what do you want to swap it with? So this only started in May this year, but it's already quite well known. What it does is that it pulls tokens into some smart contract that, in that smart contract on the UniSwap section of the Ethereum blockchain, will put counterparties directly together. So if I say I want to swap Ether to something else and connect wallet, it'll connect me with somebody who wants to swap the other way. So it's an asset swap. But instead of just waiting until somebody wants to swap exactly the same amount, they pool liquidity. And if I were to put Ether, just leaving it there and let other people swap them, then I can earn a fee on all the trades. So I could be one of these liquidity providers. And if we have a look just now, this is why I took a snapshot of this, because on Friday, we're now Tuesday. On Friday, I took another snapshot, and this was growing up to, I thought, oh, is liquidity going to go up to $3 or $4 billion, which is quite a lot in that pool. Not as much as is, for example, Tether. It's $17.5 billion of liquidity has been printed in Tether. But suddenly it dropped. And that's probably a lot to do with the fact that today Bitcoin started a really strong bull run. And I'll have another look in a minute and see whether my limit order has been hit. So the volume is much, much smaller than it is on the other exchanges. I'll tell you some more about the volumes that are traded on perpetuals and futures later on when we look at price discovery. But you can see that mostly the volume is about $250 million over 24 hours, which isn't very much really compared with the centralized exchanges. Okay, so I just stop that now and end.